There's chaos in the labor market, and something about the jobs data just doesn't add up. This week, it was reported U.S. job openings dropped to the lowest level in 3.5 years. We're talking about the JOLTS report. The job openings labor turnover survey dropped to a level of 7.4 million. This is reported in thousands. That's a far cry from the 8.9 million we saw late last year. Also this week, ADP jobs report shows a 233,000 gain in the private sector hiring, much stronger than expected. Here we can see ADP private payroll increase at a level of 233. That is the best number we've seen since July of last year. So ADP hiring surges, but the job openings decline. How is this possible? We can see here in blue, ADP payroll. It was actually a pretty nice spike to the upside. However, over the long term, there continues to be a slide to the downside in terms of the job openings. The JOLTS data also shows hiring on the JOLTS side is declining. We can see over here a long steady trend to the downside, 5.5 million. Again, that's a lot less than what we saw late 22, early 23 at a level of almost 6.4 million. The JOLTS data shows the openings per hire is declining. So for every individual that gets a new job, this shows us how many job openings there are. Currently 1.3. It was 1.8 late 22, early 23. That's actually a pretty significant drop. More contradictions in the JOLTS data: quits, separations, layoffs, and discharges. What are those? Quits represent voluntary separations. That's when we decide to leave the job. Separations overall, this is the broad category. This includes quits, layoffs, discharges, and other types of separations, such as retirements. And then we have layoffs and discharges. That's involuntary separations. That's initiated by the employer. That's layoffs or being fired. Overall, we can see separations, that is declining. That's good news. 5.1 million, much less than the 5.8 million earlier last year. That's good to see. However, when we look at the layoffs and discharges, this is not good. 1.8 million. This is the highest high we've seen going back at least to March of 23. So while separations overall are declining, the layoffs and those being fired, that is on the incline. How can we explain the divergence between an increase in hiring and a decrease in job openings? This is the answer. You take a look at the layoffs and discharges, again, that's involuntarily leaving the job, and divide that number by overall separations. So what we're showing here is the percentage of those people leaving a job. What's the percentage of those people that are being fired and or laid off? That's now 35%. That's much higher than the 26% we saw early 2023. But even we saw levels of 30% and just below that at the beginning of this year. How does that weigh historically? Well, in 2008, we saw levels of 38%. That was the beginning of 2008. Right now, or again, we're right around 35%. So if we were to match up our current levels, we're just at the beginning, more or less, of where we were in 2008. But by the full height of the recession, or the depths of the recession, we saw levels of 53%. And we can also see the red line here shows us the unemployment rate, and it correlates pretty closely. So the takeaway from this is that as the unemployment rate rises, it usually coincides, it seems to coincide a lot with layoffs. Layoffs are really the element that helps define the recession. Fast forward to present date. Again, this is layoffs and discharges divided by total separations. And we're at levels of 35% now. That is an increase from the 29% we saw earlier this year. And it does correlate with the unemployment rate. We mentioned this because we have jobs data coming up later on, very soon actually. And look for an uptick in the unemployment rate to coincide with an uptick in this layoffs and discharges divided by separations. So what is the difference between the ADP data and the JOLTS report in terms of the mechanics, how it's calculated? There actually are quite a few differences. But overall, we know ADP, it's based on actual payroll data from ADP's clients, businesses. The JOLTS report, it's reported by the U.S. Bureau of Labor Statistics. It's based on surveys of businesses and government agencies. It's a much more comprehensive data set. It defines the difference between separations, layoffs, quits, and also by region as well. Now, the takeaway really from this is that while we see a spike in the ADP payroll and a decline in the job openings, it actually does make sense because we know those layoffs are increasing. And when someone's laid off, that company may hire somebody else, and that former employee may go somewhere else, either part-time or full-time. So that could trigger higher ADP numbers. The increase in ADP payroll that we saw this week, we said, great, that's good news. 233,000 added to the payroll. Well, a lot of those individuals may have been laid off, and we're just reshuffling those individuals from one job to another, from a full-time to a part-time or vice versa. So it doesn't necessarily represent an improvement in the labor department, just movement. If you have any interest in Bitcoin, it's closing in on all-time highs. We spoke about a pretty interesting indicator. It's probably one of the most accurate in terms of forecasting long-term trends. And when we tell you what it is, it's not going to be any surprise. It's actually quite obvious. And we took a look at a lot of correlations and a lot of data. And I think you'll find what we discovered here to be quite interesting. We hope this has been helpful. We look forward to seeing you back soon.